Management Accounting 5, Tracking Job Costs. This is Ken Boyd, the owner of St. Louis Test Preparation. You'll see our email address and our phone number listed here. And a good source for some of these courses is the Principles of Accounting website. And this happens to be pulled from Chapter 19. I want to go back to an example that we've used in our cost accounting course. Assume Bob manages a Levi's factory making jeans. It's a manufacturing environment versus a retailer. You can refer to our cost accounting 2 and 3 to see this example there too. So he's got different types of costs. He's got some direct labor. Joe, for example, runs a sewing machine, and each pair of jeans requires 10 minutes of Joe's time. And it's not just salary. Think about all the costs that we're seeing in the auto industry in the U.S. It's benefits, vacation, pension costs, health costs. Direct labor can be expensive. And direct material. We all have pairs of jeans, and the biggest cost, the biggest component of making jeans is denim. And so in my example, I've said each pair of jeans requires 4 square feet of denim material. And you can think of the material and the labor costs in this way. The labor cost is normally incurred to do something with the material. Once you've got the material on your factory floor, you need to do something with it. In this case, you need to cut, sew the denim, and eventually dye it into whatever color you want. The last cost is indirect or overhead costs, utility costs, interest on loans, costs that you incur with the passage of time that don't necessarily have to do with your level of production. And as far as tracking costs, I'd like you to think about an assembly line. And along the way, as your product moves through all the stages of production, think about how much cost have I incurred based on how much work I've completed so far. So how much have I gotten done and how much has it cost me? In other words, if I hold up each pair of jeans, how much money have I spent on that pair of jeans so far? And let's go specifically to that factory floor. Imagine that the factory has several areas with the jeans at different stages of production. In one corner, you've got some jeans that are partially completed. You've got another area where maybe they're finished and packaged for delivery, and they're physically sitting in different places in your factory. And there are 3 specific terms for the stages of production, and this is new information. Raw material. We already mentioned that denim is the largest component needed to make the jeans. We may need other items like zippers and thread, but the biggest component is denim. So one area of the factory floor has stacks of denim waiting to start production. In other words, we've got the material but no labor yet. When we buy material and haven't done anything with them, we call it raw material, the ingredients of the product you're making. Work in process, accountants refer to it as WIP or WIP. Another area of the factory floor has piles of jeans that are partially completed. For example, the denim has been cut and partially sewn. We calculate costs incurred here as work in process. And then we've got the finished goods, jeans that are completed and packaged for delivery. I want to minimize this PowerPoint. I want to go over to an Excel document. Let's adjust to make sure everybody can see it. These are the T accounts that we used in an earlier broadcast. And you can see the name of the account is at the top, and we have debits and credits. And I want you to understand the debit and credit process for tracking your costs in a manufacturing environment. Transaction number 1, you buy some materials on credit, meaning you create a payable. We debit raw material, $50,000. We credit accounts payable, $50,000. So we've got some stuff to make some jeans. Step 2, we transfer some of that raw material into production. We start doing something with it. So we reduce or credit raw materials, and we move it into what account called work in process below it. 3, we get done with the jeans. Now they're finished. So in number 3, we transfer $7,000 in jean costs down to finished goods. We credit or reduce work in process. We debit or increase finished goods. And by the way, all these 3 accounts, raw material, work in process, and finished goods, are all assets in your business. You'll see in later broadcast that these are portions of what would be added up and called inventory. So then we sell some of the jeans that we made. So step 4 is transfer costs from finished goods to cost of goods sold. We credit or reduce finished goods, and we move it into an expense account with a debit called cost of goods sold. So that is an overview of how the T accounts and the debits and credits are going to work. That's our course on management accounting. You can find out more about our videos coming up. I'm going to make this a little bigger. Understanding management accounting, I'm going to go to the end here. We will soon have on our website a bibliography of all the videos that we have on YouTube. Here's our YouTube channel, Ken Boyd STL, all one word. If you want to register for live tutoring or live chat sessions, the website is stltest.net. We have chats going on all the time. Here's our email address and our phone number, and we'll see you next time.